Lawmakers plan to eliminate Social Security tax for 460,000 workers. Will you benefit? Late Saturday afternoon, May 21st, lawmakers reached a deal that will benefit thousands of workers. Roughly 460,000 individuals will no longer have their Social Security taxed if the proposal is successful, NPR News reported. The news comes as Minnesota lawmakers hash out a new tax bill. "We have put together a terrific tax bill," Senate Tax Chair Carla Nelson told NPR News. "The most significant, largest tax relief in the history of our state. And it couldn't come at a better time. Minnesotans are struggling." Elimination of the Social Security tax is arguably the largest part of the bill. Minnesota seniors are never again going to see their Social Security checks taxed, Nelson added. The bill also reduces income taxes for 2.6 million Minnesota tax filers. Lawmakers have until midnight, May 22nd, to finalize the bill. Any outcome remains unclear as the Minnesota House and Senate disagree on other aspects of the bill. Who will be affected? Residents of Minnesota claiming Social Security would see the benefit. This amounts to roughly 460,000 seniors. NPR News reported that early briefings show eliminating the tax will cost the state $520 million in the first year. How is Social Security taxed? Social Security is taxed by the federal government, and depending on where you live, it may be taxed by your state, too. While this is unavoidable, the taxes can be planned for. Whether a person pays federal tax depends on their income. You're more likely to be taxed if you have other income, like wages, self-employment, or interest. Usually, the tax is just 85% of the total Social Security benefit. It also helps that not all states tax Social Security. With inflation on the rise, some states are stepping in to help millions of Americans manage increased costs. The following states have recently passed legislation for stimulus or tax rebates: Colorado, Delaware, Georgia, Idaho, Indiana, Illinois, Maine, New Jersey, New Mexico, New York. One of the larger state benefit programs is in Maine, where thousands of residents are set to receive $850 checks. About 850,000 residents will get the checks, which are part of the state's $1.2 billion surplus budget. Income requirements must be met to qualify for the assistance, and 2021 tax returns must be filed by May 31, 2022. The payments could arrive as soon as next month. Find out which payments you've received. To check which payments you've been issued, you must first make an online account on the IRS website. Then, you can view payment amounts under the Economic Impact Payment Information section on the tax records page. The IRS also mailed notices to the addresses on file. Notice 1444 shows the first economic impact payment sent for tax year 2020. Notice 1444B shows the second economic impact payment sent for tax year 2020. Notice 1444C shows the third economic impact payment sent for tax year 2021. How did people spend their stimulus checks? When Americans got their first stimulus check from the government, the majority planned on using it for household expenses, media reported. This is most likely due to the high unemployment rate in April 2020. For the second and third checks, a much smaller percentage of Americans planned to use their checks for essential household expenses. The U.S. Census Bureau reported that a larger percentage of Americans chose to put the latter checks towards retirement or to pay off debt instead. Stimulus checks could help battle inflation. Many people are losing buying power as inflation continues to wreak havoc in the U.S., according to media. Prices are up 8.5% on average year over year, with rising gasoline prices driving the increase. Because the majority of inflation is driven by fuel prices and does not occur evenly across markets, Some economists believe that sending a stimulus check to struggling households would be beneficial. 5 ways to get an extra stimulus payment this year. You can get up to $5,000 through these extra stimulus payments. 1. Advanced child tax credits. 2. More child tax credits. 3. If you had or adopted a baby in 2021. 4. If you had a significant drop in income last year. 5. If you didn't receive a third stimulus payment. Thanks for watching.